Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is July the 12th, 2023, a big day here with the Consumer Price Index report coming out later today at 8:30 a.m. Eastern Time, and is currently 7:57 a.m. Eastern Time. I'm currently traveling and meeting with one of our wholesale investors in Detroit, Michigan. So got a little bit of an early start here today before I go into my meetings because it is a big day. I want to let you know where we've been, especially because I have been on other projects these last few days and haven't gotten a report out, and there's been a lot of movement. So let's dive right in and take a look at what is going on. Here's the report here, front page of the CNBC right now. Stock futures are a little changed as Wall Street awaits major inflation reports. Again, that's the Consumer Price Index coming out here in now less than an hour. Let's take a look at where the charts are after we've been having quite a few days of, like I say, some pretty strong movement here. Unfortunately, interest rates have been climbing up into the sevens on the Brent Bruce Daily, as you see a couple of really tough days here and a drop from this Fibonacci level here over the past week and a half. But we have been fighting our way back, having some good days, getting above these two Fibonacci levels here. And we have a lot of room to run up here before we start fighting with our moving averages overhead, which hopefully we will be doing by the end of today. So what does that mean as far as home loan interest rates? Let's take a look at our scenario here. The very well qualified Brent Bruce Daily 30-year fixed conventional, 800 FICO score, 25% down, primary residence, single family residence, just a prime time client here. We're currently sitting at 7.25% with a little bit of a credit. Now, once again, right now these prices are expired. So these aren't really today's prices. They're more of yesterday's prices. So we haven't had the market open and we haven't had the rate sheets come out for really any of our investors yet, as you can see there. But let's take a look here as of yesterday. Open this up, take a look and see where we were. Again, 7.25 was giving you a credit of $180. To get down to that 6.875 is costing, a little bit more than half of a point. If you wanted to pay a point, you're probably at 6.75, somewhere in that range. If you want to get down to that 6.0 or even into that 5.99, take a look at the cost to get below that 6.0 or the 6 handle. 3.18 points. That is a long way from where we were not that long ago when we were at 5.875, guys. You remember 5.875 with no points for a brief moment earlier in the year. That's been a long way. We're 300 basis points away from that. We have a long way to go to get back to there. Hopefully the Consumer Price Index report is going to kick that off and really get us started. Let me know what you think here. Let me know if you are going to, agree with me that the CPI is really going to help us today. Make some comments down below. I'll try to update you later in the day, maybe just shoot you out a mobile video here after we see the effects of what's going on after the Consumer Price Index, but I will be in meetings. So maybe I can get something out around lunchtime here, Eastern time. And let me know what your thoughts. Make sure that you like, subscribe, share, hit that notification bell in the top corner, and I will talk to you again soon.